Here we are 10 years after the attack on the World Trade Center, and what you see in front of you is the Liberty Tower going up, soon to be the tallest building in the United States. Well, this is a much more positive sight than what we saw 10 years ago. And 10 years ago, September 11th, 2001, I, like thousands of other people working and living in Lower Manhattan, watched the attack on the Twin Towers with my own eyes, watched the towers fall with my own eyes, felt those towers fall. Something that I will never forget, and of course, it's an utterly tragic event for those who lost their lives and their loved ones. What I can tell you is 10 years on now, as these buildings rise from the ashes, is that there's been a great response by the people of New York, the people of the United States, and here in the insurance industry. Here we're talking about an event at the time, 10 years ago, which was the largest in world history, producing about $33 billion in insured losses. That's about $40 billion in 2010 dollars. So I'm proud to say that the reconstruction is underway, and within about 2 years, this site will be thriving with thousands of workers and people in restaurants and shops and tourists. And this will be an area where everyone wants to be. September 11th, 2001, a day that surely lives in the infamy of every American, but no less so in the annals of insurance. When the attacks occurred 10 years ago, it was the largest single loss in the history of the insurance industry on a global scale. About $33 billion, or about $40 billion in today's terms. The event was absolutely unprecedented in every single respect, producing the largest property losses ever, the largest workers' compensation losses ever, the largest aviation losses in history. And so it sent shockwaves through the global insurance industry around the world. Insurance is a global business, and some 200 insurers wound up sharing in the losses associated with the 9/11 attack. In the immediate aftermath, clearly there was concern that there would be other attacks that would occur very closely in succession, and insurers ultimately did partner with the federal government to ensure that there would in fact be terrorism coverage available to make sure, like projects such as the Freedom Tower or coverage on marquee structures around the United States, just not in New York, but such things as power plants and ports and airports and sports stadiums could remain covered in the event of future terrorist attacks. So today we're proud to report that everyone who wants terrorism coverage can in fact buy it. It's available, it's affordable, and this protects businesses and allows major construction projects like the one behind me right now to employ thousands of people around the country and help keep the American economy moving. So where are we today in the insurance industry 10 years after the tragic events of September 11th, 2001? Well, it's safe to say that no event has more fundamentally transformed how insurers think about risk than the September 11th, 2001 terrorist attacks. Not Hurricane Katrina, not the Japanese earthquakes, nothing on a global scale. Insurers today look very carefully at the risks that they underwrite, particularly in major urban areas, as well as high-risk structures such as power plants, factories, shopping centers, ports, airports, sports stadiums all around the country. So we look at these very closely with respect to the propensity to be attacked, the potential losses that are involved, not only in terms of damage to the structures, but to employees and to customers and individuals who might actually be on those premises. We're concerned, of course, that the attacks could be even larger than a September 11th event, and for that reason today, there is in place, at least through 2014, a public-private partnership, the Terrorism Risk Insurance Program, that's been in place, in fact, since 2003 with the federal government. So there would be a sharing of losses in the event of a very large-scale attack, whereas smaller attacks, the losses would be absorbed by insurers themselves. This is a very important program to maintain. Insurers looking forward are going to continue to insure structures such as the Freedom Tower, such as all kinds of high-hazard, at-risk structures all around the United States and, in fact, all around the world. Nothing about that will change. And the good news is that the public-private partnership here in the United States, the willingness of insurers to take on these sorts of risks is going to allow thousands and thousands of people to be employed on a day-to-day basis, not only in constructing these buildings, but working in them for decades and decades after they're finished. So I'd like to say that after 10 years, a lot has been learned, obviously, not only by the insurance industry, but by the American people, by the United States government, governments around the world, and that we'll continue to learn from this experience and continue to hopefully make the world a safer place.
To learn more about terrorism and insurance, go to the Insurance Information Institute at III.org.